Well, they're doing better than Tesla, which keeps losing more. So if you had the option, if somebody forced you to buy either Snap or Tesla, which one would you buy?
I'd buy a good sandwich.
With queso sauce?
Honestly, if I had to buy one, I'd buy Snap.
Yes, I would too. If somebody forced me to buy either of those two, it would be Snap versus Tesla.
Yeah. So these are short and good.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On today's show, The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation on news and the markets. Oh, the government guy said it seems a cryptocurrency is like it's a means of payment. It's a store of value, and it is a distributed ledger. And then he said his niece...
Hold on. Wait. If it's a store of value, it's a very unstable store of value. And a lot of people aren't transacting with it. They're trading it, they're investing in it, but they're not like going to buy coffee with it.
I know the Winklevoss twins said regulation is bullish for Bitcoin, which I actually get. I mean, I get that. It's kind of like, if you take away the fear of it being a scam, people could actually invest in it or, hold it with less fear.
And then the government
that I get.
The government dude said his niece, I don't know, she has a bunch of Bitcoin and she has her Bitcoin in there, and these kids they HODL, they HODL, which means hold on for dear life. So for them, this is a store of value.
That's what he thinks it means, right? Hold on for dear life.
Yes, that was actually a quote in the show notes. That was something that was brought up in the meeting, and that the HODL that those kids are doing, it means hold on for dear life with the volatility of...
Isn't that funny?
He didn't say those kids are going to get wrecked.
That Goldman Sachs article was interesting. Are we recording? I hope so.
Yeah. I don't know. Stafford's in charge of that. I'm not in charge of that, but I'm not in charge of anything.
Well, there's more proof the Earth is flat, because once again, another sham went into fake space.
All right, the Earth is not flat. What, are you talking about Elon's car hitting the asteroid belt? That was the best. Oops, we gave it a little too much power. Instead of orbiting Mars, we launched it into the asteroid belt. That was my favorite thing of the week. And besides Tesla earnings. And they didn't also what was that? Oh, they didn't recover the actual those other two boosters landing like in synchronization was pretty cool, but the middle main booster that was supposed to land on the barge didn't do so well. So they lost that one. Sort of like their earnings didn't do so well. Oh, boy. Did you see their earnings, Bob?
Tesla?
Yeah.
No, it's funny because I was actually on a TV spot when they came out. They were talking about it, but I wasn't able to really pick up on what the details were.
Yeah, they actually they burning slightly less cash because they're not paying their bills completely, which isn't surprising. But they beat consensus they sold off a lot of the ZEV credits again, like 180 million in ZEV credits. But biggest loss ever. They're now, let's see, earnings minus 309. What else do we have? That was the estimated, but they came in at minus 304. And what were the other ones? Hold on. My notes on them disappear. They reported record revenue of 3.29 billion versus 3.28. Their gross margin on the vehicles though went down to 13.8, below the 14.8 estimate. And let's see what else. How much did they lose? I don't even remember. But then they're still aren't meeting their production quota on the Model 3. They see their Model SX deliveries about 100,000 in 2018, which is the same as 2017, so that's not growing anymore. It popped up initially after hours, but then that double top that triggered this week?
Yeah. Hit the first target, didn't it?
It hit every target at this point.
Every target.
It just hit 300. Mm-hmm. So there's another nice double. Yeah, the low of 300. You keep getting the dip buyers in at this 300 level. That's why we want that close below 300, because that weekly double is still technically in play.
Mm.
So we'll see if that eventually triggers. But people are turning negative. Kramer was all over Elon this week. What did he? Oh, he was equating him to David Blaine, the magician. Hold on, I gotta find that. CNBC, Kramer, and Elon. Elon Musk could be on Broadway. Is this it? No, that's the old. I hate when it can't find stuff. That was great, though.
The people that were watching this rocket ship were screaming like they were at a Beatles concert in the mid-'60s.
A bunch of them. Did a bunch of them pull up in Model 3s? Oh, they can't. Sorry.
Oh, here you go. Kramer. Elon Musk is like an illusionist David Blaine, a master at misdirection. Elon Musk pulled off an incredible magic trick, distracting from terrible Tesla results with a successful rocket launch. In the end, Musk is David Blaine. That is absolutely classic. The company lost $2 billion last year.
He's such a figure. I saw an article this week. It said Elon Musk is worth $20.9 billion, but there's one thing he can't buy. And I'm like, oh, God, please don't tell me they mean love. Like, I don't care about Elon Musk wanting love. Sure enough, I open it up. He just wants a girlfriend. I'm like, dear God, why is this in a financial news source? Oh.
Did you see the conference call after the earnings was hysterical? So Elon said the most fundamental difference is thinking about the factory really as a product, as a quite vertically integrated product. And then one of the analysts comes on and says, right, which is the Toyota production system. And Musk, the Toyota's got car manufacturing down to a friggin' science. And Musk is like, yeah, we don't think so.
Wow.
Okay, Elon, you have a hard time pumping out your Model 3s, and Toyota pumps out, I think, like 10,000 cars a week.
It's funny because I agree where I don't think like the Leaf, I don't think the Bolt or the Volt, whatever they're calling it these days.
The Bolt.
The Bolt, I don't think any of that stuff is competition for Tesla. But what is competition for Tesla is Volkswagen, Volvo, Porsche, Mercedes, BMW. As soon as they start releasing these electric cars they promised in the pipeline, I think Tesla's toast. I really do.
Well,
he can't launch enough rockets to save the stock. He better attach his stock to one of his rockets.
Well, it's interesting, though, because they just sent out, and this happened, they didn't tell this in the release notes for earnings, and they didn't tell it during the conference call. Magically, after the conference call on the InDevs, which is the Inside Electric Vehicles site, there was an announcement that the day one reservation holders who want the $35,000 version, or technically $36,000 because there's a mandatory $1,000 delivery fee, that's been delayed now until the earliest at the end of 2018 or possibly first quarter 2019. They're never going to produce that $35,000 car because they'll lose way too much money on it.
Yeah.
So it's not, all the cars they're selling now are in the 50,000s. It's not a $35,000 car. So it doesn't compete with the Leafs and the Bolts because they're not even selling a $35,000 version.
Right.
So it's competing with in the 50,000 range, and there's going to be a lot of other manufacturers coming out this year. I mean, you got Jaguar, you have Audi, you have Porsche. You have Volkswagen, and those are all hitting this year. So we'll see. But let's see if his stock, he can't launch enough rockets.
He can't. He's got to attach his stock to one of his rockets. And I feel like the stock would pull his rockets down once all this stuff starts happening.
Now, you sort of, what looked like a rocket this week was the VIX.
Yeah. So I've been really, excited / interested to talk to you about this because as an options guy and as an engineer and as a math guy, I got all that out there. How did you feel about the relative level of the VIX versus the percentage increase? It's obvious that the percentage increase, you had an 89% increase in one day. If you go over a 2-day period, it was like 101% or something crazy like that. Obviously, from a trading perspective, somebody who's short the VIX got just destroyed. But in terms of that type of a move, how common is that in options? I mean, just what does that make you think about?
What does it make me think about? Well, as
an options guy, did you go, oh my God, something's up 89%? No. Or did you say no? That's completely in the realm of what happens in options with Vega and everything.
It can happen when you have an explosive move, especially with. The VIX was suppressed for so long with these people trading like the XIV, which is short volatility, and it kept pushing it down, and the boat. I mean, everything was short volatility, and when volatility started to move. It's like everybody was on one side of the ship, and the wave came in, and they couldn't scramble to the other side fast enough, so that it capsized. I mean, Credit Suisse, which has the XIV product, did you see they terminated it?
Yeah, they terminated it.
Its last trading day is expected to be February 21st because it went from it had a return last year of 180%. Right. And everybody looked like a genius. Oh, just keep buying this. I have a chart in the show notes. Did you see that chart of the XIV?
No, I'll look at it now.
Go look at it. It's near the top, but that's like it. And in the clause, and they're like, well, if it loses that much of a value, we can just terminate it, and if you're still own the product at the date of termination, it's just gonna get liquidated at its value at that point. But the chart, what was funny is people were tweeting and talking about that chart, especially some of the crypto guys. They're like, and they say Bitcoin's a scam. I mean, look at that chart. It's like, boom.
They got a point.
And it's
definitely got a point. And it's gone.
It's like in one day, you drop from, like in 2 days, you drop from a value of 150 to 5.
Wow.
I mean, you want to talk about something in a bubble.
Yeah, I mean, the crypto guys have a point. They really do. When you see something like that, I mean, wow.
Yeah, its high earlier in January was 146.44, and its low today was $5.10.
Wow. I love how they can just terminate it.
Yep, it's gone.
Can we all just, this is something that Mike and I have said for years, you cannot separate risk and reward. They are inexorable. And when you see something is up 180% in a year and you go piling into it, understand here's just another more evidence of it. That when something returns that much, it can take that much away just as quickly, if not quicker.
Yeah, that chart looks like BitConnect.
Oh, did you know who Seth Golden is?
Is that retail VIX guy?
Yeah, he's been piling into the short stuff. He's the guy who made tons of money. He was profiled in the New York Times. You know, the genius who essentially short volatility and everything. So this XIV blew up, and it's still tradable now. And it was great. He came out. He was interviewed this week, and people are scared out of their minds. They're in really rough shape, said Seth Goldman. It's really stressful, he said. I was up until the wee hours checking my phone to see where the VIX futures were trading. Here's what's great. Nonetheless, he said Tuesday that he was still wagering 21% of his portfolio, or 600,000, that volatility would fall as it had in the past. He piled in more money into this, going, it's just got to fall.
Wow.
And that's cannonballing. I mean, yes, volatility will come back down, but now he's just like piling in more money, going, cannonball.
I mean, that is the VIX. The VIX is mean reverting, but people don't understand the mean can move.
Yes. So please don't do that. That's like
Here's some stats for you. Up to 2014, okay, the average, so from the start of the VIX to about 2014, the average was about 21. The mean was about 17, and the mode was about 13. All way above where we've seen it lately.
Right.
I mean, if the median is 17, darn, if the average is 21, how long can it stay up in the 40s and 50s? It can stay for a long time. I mean, that's the history of the thing through 2014. And then it just kind of ground down from there.
Yep. Yeah, the low last year was 856 set in December, which is pretty much, I think, that's all-time low. I believe that was. Wow. Yeah, that was, at least in 20 years of data I have, that's the lowest it was ever. And I remember the low, like in 93, was 870 or something, so that's lower than that. So, oh boy, let's all go in. Let's all double down. Maybe we should just HODL the XIV. Oh wait, it's going away. We can't do that.
Shodl.
Shodl. We don't want to hold on for dear life.
Yeah, we can Shodl the futures.
Yeah.
Sell hard for dear life.
That's pretty funny because we've had a lot of volatility in the cryptos. You know, they sold down and now they're recovering a bit. It was funny because the CFTC chairman this week came out, quote, Bitcoin's volatility was not as large as other asset classes like VIX. Remember how Bitcoin was the risk? You're going to lose it all. And now it's like, oh, if you were in the VIX, you're screwed. And then he goes, we have seen extreme volatility in Bitcoin, but in our world, quote, commodities, we are used to volatility in asset classes. Well, yeah, like crude and other. There's a lot of things that are volatile.
Wow.
And then this is sort of a transition into cryptos. February 4th, 2018, Financial Times. The Financial Times newspaper run by the PBOC, People's Bank of China, said a series of regulatory measures will be taken against ICO and virtual currency transactions at home and abroad, including banning the existence of relevant businesses and banning and disposing of domestic and foreign virtual currency exchange websites. So we'll have to see if that comes to play. Bitcoin ban expands across credit cards as big U.S. banks recoil. A growing number of big U.S. credit card issuers are deciding they don't want to finance a falling knife. So JP Morgan Chase, Bank of America, and Citigroup said they're halting purchases of Bitcoin and other cryptocurrencies on their credit cards. JP Morgan enacted the ban last Saturday, doesn't want the credit card risk associated with the transactions. Bank of America started declining credit card transactions with known crypto exchanges on Friday. And late Friday, Citigroup said it will halt purchases of cryptos on its credit cards and will continue to review our policy as this market evolves.
As we can make money.
The amount of people using credit card to buy Bitcoin, and then it's like they all into November, December, when it was trading, 15, 16, 17, and now it's trading 8,400.
Right.
So, and their credit card bills like coming due, and oops, not a smart transaction. UK's Royal Mint launches gold-backed cryptocurrency. That's pretty interesting. And Australia's biggest gold refiner, the Perth Mint, is developing its own cryptocurrency backed by physical precious metals.
See, these are the things where blockchain and cryptos matter. I know of another, I shouldn't say too much about this, but I know of another situation where someone is developing their own coin backed by, well, never mind. These are the things where, like, governments can actually regulate them, but the regulation won't hurt. Because if somebody's backing it by precious metals, essentially what you've got is the old U.S. dollar, which would be a very popular thing for some gold bugs. There's that. There was the what's the name of the one that was backed by U.S. dollars that they're not sure has the dollars?
Tether.
Tether. Yeah, Tether. So, I mean, it would be really tough to back a crypto with physical gold because there's not a lot of physical gold out there. But you can get to the point where buying of a cryptocurrency like that will push the price of gold higher.
Yep. No, I just got an email. Learn how to code your very own cryptocurrency, then deploy it to the Ethereum blockchain. Yay, I'm going to learn. Then I'm going to make Mike Coin.
There you go, Mikey Coin.
Mikey Coin. Let's see. What else? Oh, yeah, to Beijing here. Did they just also, they're going to look to block cryptocurrency-related websites. So China's really starting to crack down on this more and more. By the way, with that crypto heist we talked about, remember CoinCheck, the 500 million hack of CoinCheck? Bloomberg's reporting that was North Korea hackers were behind it.
Yeah.
So
there's also, it's funny about that, about the China thing, is that China, because they're a combination of capitalism and communism still, is extremely concerned with the black market and always has been. And that's part of the reason why I believe they're one of the more harsh governments in terms of cracking down on cryptos and.
Are you still there? And he's gone. Are you still there, Stafford?
Yeah, one of the main reasons is there a communist government. That's why. That's the correct answer. Ding, ding, ding. Communist government. Ding, ding, ding.
Oh.
Yeah, I just, now you're back. You disappeared.
So what line did I disappear on?
The correct line. The reason is they are a communist government. Ding, ding, ding. That's the correct answer.
And then I cut off? China cut my Skype off?
Yeah, it wasn't the CIA this time.
It was China this time.
It might have been related to Alexa.
Alexa, did China cut off my Skype? Alexa, Did China cut off my Skype?
Alexa, did China cut off Bob Iacchino's Skype? Okay, Mr. Winter Olympic Games.
No, but China's trying to crack down on the black market. They've been trying for years. That's why they've outlawed things like U.S. dollars and stuff like that being in the country. And cryptos are just a beautiful black market tool. So that's why they're one of the more harsh on this. On another note, China next week is launching their own crude oil contract in their own currency. So that'll be interesting to watch. It's open to foreigners to trade, too.
That will be interesting to watch.
Yeah, so another direct assault on the U.S. dollar.
Oh, boy. Speaking of dollars, did you see in the Amazon taking over everything segment? First off, Amazon to deliver Whole Foods groceries in 2 hours for Prime users. So first off, starting in Austin, Cincinnati, Dallas, and Virginia Beach will be first to get the service this year, and then it's going to expand throughout the U.S. this year. 2-hour delivery will be free, and 1-hour option costs $7.99 on orders of 35 or more. The service will be available daily from 8 to 10 p.m., 8 a.m. to 10 p.m.
So 2 hours.
No, 8 a.m. to 10 p.m. Yeah, and you'll get 2-hour delivery.
But 2-hour window. So you order at 10, you'll get it at midnight, or you order at 8, you'll get it at 10, something like that. Yeah, I'm sure there'll be a cutoff.
Yeah, but if I'm sitting around at 10 a.m. saying, I'm out of lunch food and I need to make a sandwich, and I order $35 worth of groceries, I could have it by noon.
You know one of the things I love most in the world? A good sandwich.
A good sandwich.
By the way, they don't sell my grass-fed beef hot dogs on the Prime site. I was very bothered by that.
Well, that's no good. Yeah. Call Jeff Bezos.
I like to pretend those grass-fed beef hot dogs are really healthy. What, they got no nitrates. They've got 78,000 milligrams of sodium, and they're made with grass-fed beef. What could be bad?
Is it what beef parts are in there?
I didn't ask.
Did you see the news out this morning? Bezos is launching shipping with Amazon.
They're going to become a shipping company.
Yep, Amazon plans to on shipping with Amazon this year. New Amazon shipping option would compete against UPS and FedEx. Ship with Amazon to start in Los Angeles first, then go nationwide.
Wow.
So, and UPS and FedEx, let's see where they are right now. UPS was already dropping like a rock. Wow. Have you seen a UPS chart?
I have not.
So at the, on the 17th or the 18th of January, it was 135.53. It's now trading 105.61.
Wow.
That's what's FedEx's symbol? FDX. That's right.
It's a double whammy. It's a double whammy for them, right? I mean, Amazon is becoming more and more their own shipping company. So it's not only that FedEx has competition, but they lose a major client.
Yeah, and
horrible development.
Yeah, it's a double whammy. Yeah, you're right. FedEx set a high of 274.66. Back on the 18th, it's now trading 231.08.
Wow. That's Alexa.
What else? Oh, we had. Well, what is going on in the crude market besides you mentioned the new China's rolling out their new contract, because we've had a pretty big plunge in crude this week.
So there's 3 major crude reporting agencies. There's the API, which is the American Petroleum Institute. There is the IEA, which is the International Energy Administration in Paris. And there's the EIA, which is the Energy Information Administration in the U.S. A lot of administrations. There's also OPEC, but we're not going to talk about that for a minute. The IEA raised production forecasts for the U.S. late last year. And now the EIA did it, which tends to have more credibility because it's a U.S. institution. They bumped up production estimates. So last month we reached 10.2 million barrels a day, which is a record for the U.S. in production. Next year, the EIA, the U.S. reporting agency, is estimating for 2018 10.78 million barrels a day, which obviously obliterates the old record. And for 2019, 11 million barrels a day. Now, on top of that, we've reached a new record with basically flat rig counts since August. So the rig counts have gone up, gone down. If you look at a rig count bar chart, it's been essentially flat since August. And so that means they're getting more efficient. They're getting more crude out of traditional wells. President Trump is opening up new areas, which won't be drilled until 2019. But still, when you look down the road, there is just no case but bearishness for crude oil. Having said that, in the short term, we had record number of speculative longs, most ever, in crude oil, according to the CFTC. Commitment of Traders report. And according, if you just put your basic open interest line on a chart, it's not as obviously scientifically perfect as the CFTC report is, but you've seen just an uptick as the price has gone up in open interest. That dipped this week. So, Mike, as you know, when there's huge, what makes markets go down rapidly is longs liquidating, not short sellers, not people taking mild profits. So there's a lot of long liquidation that helped push this down below 60 today. Now, seasonality is about to turn extremely bullish. If you look at the 20-year seasonality of crude oil, the rally starts about the second or third week of February and continues for the most part all the way through to about September. There's dips, March it generally dips a little bit, but it's basically a straight line up from the first or second week of February all the way through September. 20-year seasonality. That's a couple of things. Number one, it's traders who are used to the seasonality preparing for the rally that comes with the summer driving season, because it can start as early as March or April. It's my hypothesis that the dip that comes in March is because it generally doesn't start by then. But then it goes all the way through, and refineries also start to refine like crazy the winter blend. They start to pull oil out of storage and refine winter blend so they have enough winter blend gasoline to survive turnaround, which is when they shut everything down in stages to reconfigure things for summer blend gasoline. And that usually also starts around March or so. So there's a lot of things pointing to a buy this dip trade that would work short term. But long term, the fundamentals are nothing but lower. I'm guessing 2019 we see $35 crude oil, but obviously I'll change that if things develop differently. That's basically what's been going on.
Gotcha. Well, I forgot to mention when we were talking about Tesla. Well, first off, in the electric vehicles and self-driving car segment, Continental and NVIDIA are partnered. They just announced a partnership this week to the partnership will enable production of AI computer systems that scale from automated level 2 features through full level 5, and full level 3 is by 2021. That's sort of a big partnership. They're doing dedicated engineering teams where each company will work together to develop self-driving solutions based on the NVIDIA Drive platforms. The solutions will utilize Continental's experience in system and software engineering for ASIL D-rated safety, the highest rating level, and integrate range of Continental sensors technologies, including radar, camera, and guess what? High-resolution 3D LiDAR. You gotta have that LiDAR in there. We love
LiDAR in this podcast.
The Tesla doesn't love LiDAR. They don't put LiDAR on their car.
There was a LiDAR article recently about mapping of the Earth via LiDAR, similar to like Google Earth, and it was just like so accurate, it was ridiculous. I don't know. I never mind, because I don't remember the article. But
by the way, back to Tesla, how they lose money hand over. The more cars they sell, the more money they lose, which is actually the opposite of what you want for a company that sells a product. This is interesting. There was a survey done according to a recent Autolist survey, nearly 75% of respondents said they believed Tesla was a profitable company. 54% said they believed the company was profitable. Another 19% said it was very profitable. Oops. So, but that's scary. If people are actually investing in the stock and don't actually follow the earnings or don't understand what minus 304 in earnings means.
That's the problem with the one piece of advice that people repeat from Warren Buffett that he put out years ago: buy stocks where you like the product. That's the only sort of issue with that. I don't think Warren Buffett was saying, don't worry about the company's finances, just buy the stock if you like the product. I think he would rephrase that now looking at Tesla stock.
So, yeah, Tesla's not quite profitable. But we had a lot of Fed speak this week. Oh, and
yes, we did.
It was the first week of the new Fed chairman, right?
Right. We also had a 5-hour government shutdown this week that people may not have noticed.
It was only 5 hours.
It was 5 hours. I don't think that's going to have an effect on the economy.
I don't either.
The deal is interesting because the government shutdown was stupid, but the government's actually more set up now than it's been in years because there's a 2-year budget deal in place. It's interesting. They passed a 2-year budget deal, but the debt limit, they have another vote that they have to pass in order to extend the debt limit. They've agreed to a debt limit increase through March of 2019, but they have to re-agree to it on March 23rd of this year for some reason. I think that's still a way to make sure that immigration debates happen or something. I don't know. I don't know what these guys are doing.
Wow. Well, I never know what they're doing. So, But what a week to start being Fed chairman with this. We've had a little market sell-off.
I know, right?
Yeah, it's like, and it's down. There was a lot of good Fed talk though. We had Kaplan saying that it's healthy. There's a market correction and that the market valuations are high relative to history. Dudley coming out, stock market drop, not a big story for central bankers yet. I like the yet. Well, they should. It's not in their mandate but it seems that they still watch it. Sustained drop in stock market would impact his outlook if you had a sustained look, and he has not changed his economic outlook among recent market turmoil. These stock sell-off so far is, quote, small potatoes. He came out, Dudley was on fire this week. First, a gradual hike meant more economic confidence. They could, where is it? He also said 4 2018 hikes are possible if economic outlook continues to gain.
I mentioned it last week's podcast. I still think that's why they added the word further, so that they can take it out. Further gradual rate hikes can become further rate hikes, and that'll seem more aggressive.
So, but this market, the market, I don't mind this correction at all because... No,
not at all.
It went vertical. It was like... When anything starts going vertical up and peeling away, we had those cascading trend lines, that they just keep getting steeper and steeper and steeper and steeper, and you're looking at it going, this is not going to end well. And then, it's essentially the whole investing public goes in, all in, and then ship tips.
Yeah, it's just.
But we're still only back to where we were trading in November on the Dow. That put it into perspective. It's a drop, but we're still back where we were trading right around Thanksgiving time.
We're still up some 20% from the election. It's again, people talk about needing a healthy correction. Then when it happens, we're like, whoa, we didn't want this.
We didn't mean it.
I know, and we actually fell precisely into correction territory. And people need to understand, they talk about a correction being 8 to 10%. Understand, people, that means that's the minimum it needs to go in order to call it a technical correction. It can go further. So I think the panic is now over because we hit that 8 to 10% level. I think as of yesterday, it was 10.2 in the S&P, 10.4 in the Dow, and I think 9.6 or 9.7 in the NASDAQ. So we hit what everyone can comfortably call in any language a technical correction. But it can go further than that. It's a repricing. You're pricing things with higher interest rates now. So that doesn't mean the bull market is over by any stretch. Just corrections never feel good, especially when they happen in a freaking day and a half. This thing felt so fast at the time but they always feel like this. And when you've got something that goes up and sets a record for 400 and some odd days without a 5% move lower, the move lower is going to happen quicker because there's more people long. This is completely normal. Fundamentals of the markets are still good. Economy is still growing. We don't have anyone spending the Trump tax cut money yet. They just got it. And we don't have the corporations with the new lower tax profits in their coffers yet. So things are good, man.
Well, there you have it from Bob Iacchino.
That's kind of my why, to be honest. So I just did my why.
You just did it.
I know. I just did my why. So
today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Which, quick off the show, I got to do this 11 o'clock thing. You want to keep talking, or you want to do your what and end it?
I don't even have a what.
He hasn't had a what forever for many episodes.
Yeah, because I do my what's like every day on our video channel, and I'm whatted out.
Look at a Bank of America potential double top, Mike.
Let me look at Bank of America potential double top.
Jeez,
I was looking at $5 GoPro.
I gotta do everything.
Oh, we have a double top in Bank of America?
I don't know. I thought I saw it this morning.
No, we have a potential double bottom, but it's not won't fit our rules. Twitter exploded.
There you go.
Twitter. I mean, it was trading a high of 35 earlier this.
You can definitely find a pattern on something.
Let me go to my. Oh, look at that. Oh no. Chipotle.
All right.
Womp womp womp.
Do you have a what this week, Mike?
No, I don't. Yeah, don't buy Chipotle.
Don't buy Chipotle.
Well, I wanted to see. I had all my lines and they disappeared because it's. Oh, here we go. I had to. Oh, remember? All right. When did I call this out? This is fantastic. Chipotle. I had the next price level being 251.55, and that's been on the chart. Hold on. Since, I'll give you the week I put it on the chart. The week of October 31st of 2016. Wow. 2016, I had a projection from those lows with the 25% GAN level down to 251.15. And guess what? We just traded 249.53.
Wow.
Would you like
what?
Would you like a cookie?
No, I want a burrito with queso sauce.
Were we supposed to try those Cajun fries or whatever the hell they were, nacho fries?
I haven't. Yeah, I don't know. I need to.
By the way, I'm going long all the Goldman Sachs I can if we get above 262. And that's it's $19 away, so it's pretty far.
What based off what?
You look at a daily chart. That would be a peak on a double bottom, number one, and then number two, you look off to the left, and it's a static R zone as well.
Yeah, we'd have to get through this.
It's 260, 175, or 95. So I'll go 262.
Huh. There's a lot. Oh, let me check in on Blue Apron. Oh no.
Oh no.
It's still trading. It's trading $3.30. They got a little pop yesterday, but they gave it all back today.
Beautiful.
Yeah. Don't go long Blue Apron yet. There's no pattern there. Don't go long GoPro. Don't.
What about Snap? We gave up on
Snap had a pop.
I know, we gave up on them.
I'm not touching Snap. Okay, they popped to. I mean, they're still what they popped to. High of 21.22, back now down to 18.77. They popped out of a nice horizontal channel, but it hit. They on their earnings. See, they only lost. They beat because they only lost 13 cents versus 14 cents estimated.
Yeah, again, I don't know why anybody wants to own this stock. I just don't know what they have. What's their product?
Well, look, their losses, they lost 2.31, and then it went down to losing 16 cents, and then it lost 14 cents, and now it's losing 13 cents.
They lost less.